Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
New week, new opportunities. Welcome to Modern Investing Techniques, episode 84. Today is June 22nd, 2026. I'm Patrick, broadcasting from Vancouver. Monday means fresh setups. Let's break down the week ahead and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian TFSA holders face higher borrowing costs as May inflation hit 3.2% on gas prices, keeping rate cut odds lower than expected. Markets closed with the S&P 500 at 7,501, up 1.1%. The NASDAQ finished at 26,518, up 1.9%. The TSX Composite sat flat at 34,969. Sentiment lifted on U.S Iran peace talk progress and SpaceX first week IPO frenzy. The Bank of Canada decision looms in July, with markets now pricing fewer cuts after the 3.2% inflation print. The Fed faces similar pressure from sticky energy prices. Tech led gains while energy lagged despite the data center power deals. Our portfolio sits at plus 1.04% year to date versus the NASDAQ's plus 14.13% year to date, for negative 13.09% alpha. M&A-driven sector rotation lets investors capture premium valuations when large pharma or tech firms acquire next-generation platforms. Today's AbbVie $10.9 billion Apogoba deal shows how acquirers pay up for late-stage immunology assets that extend patent-protected revenue. Screen for targets with phase 2 or later data and low float. Set alerts on volume above the 20-day average once the announcement hits. The pattern has worked best in 2021 to 2023 biotech rallies, when acquirer cash balances exceeded $5 billion. Risk is regulatory delay or integration failure that erodes the initial pop. Use your broker's M&A calendar filter plus a simple relative strength scan versus the XBI ETF to time entries. This is the exact scenario where our earlier rule about volume confirmation would have helped. If you want to try this with your TFSA, start by filtering for phase 2 assets with cash-rich acquirers, and watch the first volume spike after announcement. This week's practice investment is a weekly hold on CRM, Salesforce.com Incorporated. The strategy is a catalyst entry on the announced AI fan engagement partnership with the VCARB F1 team. The technical setup shows price above the 50-day moving average. Watch for volume confirmation above the 20-day average on follow-through. Risk assessment notes that partnership news could fade if the broader software sector rotates. We set the stop loss at 5% below entry. The target is plus 3% to plus 6% over the week if the AI theme holds. Confidence is medium because this is a single catalyst with sector tailwinds, but no volume spike yet. This trade demonstrates waiting for a concrete partnership catalyst in a favored sector rather than chasing broad momentum. Listeners learn to size positions conservatively when only one confirming factor is present. This is a simulated trade for educational purposes only. We will track the position through Friday and report the outcome. Yesterday's trade review covers the ION Catalyst hold. Market data was unavailable for evaluation. Without closing prices, we cannot measure whether the leadership change catalyst produced any excess return relative to the broader market. The new rule requires closing price confirmation before declaring any catalyst trade complete. That lesson came directly from the unavailable benchmark data on this trade. The running total across all simulated trades now stands at $396.68. The win rate is 53% from 20 wins out of 38 total trades. Cumulative alpha versus the NASDAQ across 27 benchmarked trades remains plus 21.2%. Average return per trade is plus 1.04%. Best trade reached plus 20.11%, while the worst sat at negative 11.35%. Our AI analysis is learning from the volume confirmation pattern and adjusting future screens accordingly. The TradingView Volume Profile Indicator overlays volume at price data on any chart so you can see exactly where heavy institutional buying or selling occurred. It gives an edge by highlighting high volume nodes that often act as support or resistance on retests. Any investor with a free or paid TradingView account can add it in 2 clicks under the Indicators menu. If today's momentum strategy interests you, this tool is exactly how you would screen for setups like the Apogee rotation. Wealthsimple's built-in options chain now includes volume and open interest filters that let Canadian investors quickly find liquid strikes for covered calls. It surfaces the highest premium names in your watch list without leaving the platform. TFSA and RRSP users should check the Eligible for Registered Accounts toggle before placing orders. SpaceX shares surge in the first public week as retail and options traders piled into the Elon Musk-led company, creating elevated volatility that can be harvested with defined risk strategies. The action item is to add SPX-related proxies, or RKEX, to the watch list, and set alerts for 5% daily moves before considering any options overlay. The company completed its transition to public markets with notable enthusiasm from both institutional desks and individual accounts. Elevated trading ranges emerged immediately, driven by options activity around key strike levels. Market participants noted the rapid price swings offered opportunities for premium collection on defined risk spreads. Observers pointed to the first week volume as a signal of sustained interest beyond the initial listing day. Silver miner Cinda filed a U.S. IPO targeting up to $235.2 million, positioning the new pure-play silver name as an entry point for precious metals exposure without the legacy costs of established producers. The filing highlights a streamlined cost structure focused on current mining assets rather than older infrastructure. Investors evaluating the deal are advised to wait for the first day trading range to establish before any allocation. The prospectus sets a clear volume threshold of 500,000 shares before considering participation. The timing aligns with broader interest in silver prices amid industrial demand growth. No allocation is recommended until after the initial trading session clarifies support levels. Canada and Australia finalized a $1.8 billion Arctic radar deal, marking the largest ever Australian defence export and creating a multi-year revenue stream for BAE Systems Australia and Canadian integrators. The contract covers Horizon radar systems with phased delivery milestones extending over several years. Canadian participants stand to benefit from integration work and ongoing maintenance agreements. The agreement strengthens bilateral defense ties while generating predictable cash flows for involved contractors. Portfolio managers are encouraged to review holdings in Canadian industrials with defense exposure for any re-rating potential once contract milestones are confirmed. The scale of the transaction exceeds previous cross-border defense pacts between the two nations. The source for these details is financialpost.com. Now, here is something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought CRM last week after the AI fan engagement partnership news, and your market order filled at the ask. The bid-ask spread on the nearest weekly call was 8 cents wide in the first 15 minutes of trading, costing you an extra 0.4% before any price move. Calls give the right to buy at a set strike, while puts give the right to sell. Intrinsic value is the difference between strike and current price, while time value reflects days until expiration and volatility. A covered call on shares you already own collects premium income but caps upside. A cash-secured put lets you buy at a discount if the stock drops. Delta measures how much the option price moves with the stock, while theta shows daily time decay. The biggest mistake is selling naked calls without defined risk. Instead, always size positions so maximum loss stays under 2% of portfolio and check open interest before entering. Before we wrap, pull up the 30-day options chain on CRM and calculate the annualized yield of the nearest out-of-the-money covered call. Note the premium as a percentage of current price. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Models and Agents a listen, your daily briefing on AI models and agents. You can explore the whole lineup at neurarannetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?